Hi, welcome to Market in a Minute. We had a call on energy. We were right. Some of the stocks popped nicely, but it's not a big deal in our opinion to the markets at this point. We had a nice quote came from a friend of ours, from a person inside Iran that they know well, and the quote was, and I'll go over in more detail, but give the Israelis one more week. Let this thing play out. And so the Fed meets this week. That's also very important. Watch what they say. So the dot plots are coming out. We think it could move the markets. And then what we're doing in our portfolios is very interesting. We're making a number of different moves. The market update. So as we expected, not a big deal for oil prices. Iran's not that important. Only 2% of the world's oil supply, and obviously that can be picked up by other producers outside. So there's plenty of supply to make up for that loss of oil. The price of oil is up about $10 in a couple days. And if you look at a 5-year chart, it just looks like a little squiggle here. So Iran is not that important to the oil markets. So this is a quote coming from inside of Iran, and it's basically pushing for a regime change. It says, give the Israelis one more week, and they will take out what is left of the top thieves, and the people will do the rest. So they're hoping for the Israelis to continue to eliminate some of the leadership in Iran, and then the people will put in a form of government that is more pro-West. It says, Iran is the most pro-West country in the region, highly educated and competent generation of 22 to 50-year-olds. So I think that could be a big positive if there was regime change. And then the Israelis ought to have a chance to complete the job. Russia is the real issue, but I think Putin and Trump are talking. So maybe this kind of just moves on. So at some point they find a solution to Russia. Trump's not pushing it. I thought they would probably be moving a little faster. But as this plays out in Iran, the focus is going to turn on Russia. And so Russia is important. If the same thing happened with Russia, putting sanctions around Russia, I should say, oil's not going to be up $10. It's going to be up $30 or more if that would occur. So Russia is important. So it's a risk out there. If we get some intelligence that says, okay, this is going to happen, then we're going to pile into energy in a much bigger way. What really bothers me, so I'm sure the Mexican cartel is not this stupid, but the burning of American flags in the U.S. by people waving Mexican flags, it's just poking the bear. Trump has designated these cartels as a terrorist group, so he can go in and take them out anytime he likes. He has the authority to do that because that's what he designated them as terrorists. So at some point in time, this could occur. We don't think it's a big deal for the markets, but I just want to point that out because a lot of people are really bothered by the American flag being burnt in these protests. The Federal Reserve meets on this week, and they come out on Wednesday with their dot plots. Here's the dot plots. So these are from March. So you can see their expectations for inflation is 2.7%. That's going to be key for what they come out for inflation. I think you could maybe push this number down a little bit. And then for the federal funds rate, they have 3.9. That implies 2 cuts this year. I want to see what they do with that. And then down to 3.4% in 2026. So these are important factors. So we're going to be watching that closely. The other thing that we've been talking about is the quantitative tightening around mortgages. So the Federal Reserve's been putting more and more mortgages back into the market, keeping interest rates high on mortgages, higher than what they should be. It's great investment. Buy the agency debt. We love agency debt because it's about 1% too high because of what the Federal Reserve's doing. So they should kill off the quantitative tightening, at least for now, and let the housing market recover. Some markets are down 25% in price in terms of houses from their high. And we think on average it's down about 5 to 10%. So this is a major hit to the net worth of individuals. And you don't have to kill the housing market off at this point to fight inflation. Those prices have come down. It'll flow through to the inflation numbers as time goes on. So that's kind of embedded in there that inflation is going to come down because of the housing prices that's leveling out or coming down. The G7. So we think that there's some announcements that come out after probably the G7 is over or right at the end. Some trade announcements. We think we're going to see a lot of positive news in the coming weeks about positive trade agreements. And the valuations of the stock market, the S&P 500, they're getting back up there. And so that's what's happening is that the larger companies that have higher valuations, roughly the stock market, the S&P is about 22 times earnings. That's where it starts to tire out. We think the investors are rotating into those lower quality companies. I won't say low quality companies, but lower quality companies. That's what's performing right now in the overall stock market. That's one of our strategies is to focus on the second tier companies that are still really good companies. And small caps, we want to play that when the Fed starts to cut interest rates. Now, portfolio changes. So we're doing some really interesting things. So the oil trade worked out well. We had a nice pop in Halliburton, right? We bought it well, and we just sold it. So maybe there's more upside in the stock, particularly if Russia comes into play. But we took some profit there, and we may come back into that. BP and Baker Hughes, we think those are secular plays that got too cheap with the energy group being compressed so much relative to the overall markets. We think that the weighting in the energy sector in the stock market is only 3%. So if would happen to be a sanction of the Russian oil, you want more than 3%, but you should have at least 3% energy in your portfolios. So we would play more with, if we get the inclination that this is going to occur, we may have 10% energy in the portfolios and own the larger cap ones, really high quality companies in that sector, and some of the ones that'll bounce quite a bit as well. We're surprised on Friday when the stock market opened because of the Iran situation that it opened down and the defensive stocks didn't perform as expected. We kind of thought that it would pop as well, but they were down a little bit. And we think that the group is washed out. A lot of the stocks are really cheap, but I'm surprised they didn't bounce. So here's one that we think will bounce. So Pepsi. We talked about this a lot in the past. I think technically it's really set up nicely. You can see kind of it's these lower highs here, and it's kind of running out of steam on the downside. So it's kind of breaking the downward trend. It's gone sideways for a while. I think that's kind of a coiled spring. If you believe in technicals, you're probably interested to see how this one pop. In terms of other sectors, we still like healthcare, consumer cyclicals, financials, but you have to be really selective on what you buy. And we're just highlighting some of the more interesting stocks there. Anavex, okay, they're 6 months from approval of a blockbuster Alzheimer's drug that they filed for approval in Europe in December. That one has 10x upside. AVXL. We've talked about this one a lot in the past. We just want to point out that it's kind of moving down, the timeline, getting closer and closer to approval. So this thing could pop really nicely in anticipation and then move up in a big way after it's approved. It's kind of odd. The Trump administration should pay attention to this. Why is a really good Alzheimer's drug being filed in Europe before it's being filed in the U.S., and they are a U.S. company? Gap. Gap is our favorite play in the consumer cyclical stocks. We like this one on a secular basis. We think there's plenty of upside potential in that stock and the earnings estimates to go higher. It pulled back big on the tariffs, and we think there's nice upside in this one. We don't think the tariffs are really going to be material, but the company laid out some pretty negative scenarios where it could really impact their earnings of roughly 10%. Financials. So we like the financial group. particularly when the Fed starts cutting rates. So that's why this Federal Reserve meeting is important. We think they'll probably cut rates as later in this year, maybe September. We're hoping they cut at least twice, so we'll have to see what they say in their dot plots. But there's a lot of cheap financial stocks. COP is one we like a lot. That's Capital One, large credit card company now with the merger of Discovery. Cheap stock. We're looking at a point to buy that. U.S. Bank, Fifth Third. We like those a lot. Cheap stocks. Wells Fargo. I can't believe I'm saying Wells Fargo, but Wells Fargo's got the monkey off their back. We think that one probably goes higher as well. So 4 good quality companies that we can put some money into at the right time. We love buying the ultra high growth consumer stocks when there's dislocation in the markets. So some of these have already come back nicely, but Shake Shack is an example. So Shake Shack was over $130 with the decline in the overall market. So we had roughly 20% decline in the markets. It's popped back up. So we entered it way down here around $80 a share. Now it's pushing 130. We exited a stock, or I should say we took some profits in it. We still like it. We still think it's a good value, but we took some profits in it. We had a very nice move. So that's 50% sort of move or higher in a very short period of time. So we're banking some profits there. In the technology sector, we've done the same thing, but smaller moves. Micron, we picked that up really well. We still like Micron. They report this week. Maybe we sold it too early, but we had a nice trade in that stock. Qualcomm the same way. We got in, got out. So these are the second tier stocks I've been talking about, and there's a lot of them. So AMAT is one I would point you to right now. AMAT, we entered it, not at the bottom, but entered it recently, and we think that there's considerably more upside to that stock. We like the semiconductor capital equipment stocks because we think that the semiconductors will continue to grow as AI continues to grow and more computing capacity is demanded. Now Intel is not high quality by any means anymore, but it's below $20, and we think that's a value there. We think it's starting to turn. If that thing turns, every portfolio manager in America is going to have to own it. So we like Intel, and it could be bought out by somebody as well. AMD, we think that's getting better. The momentum's coming back in their business, so we have that on our shopping list. Our equity strategies, what we're doing there. So we're in a stock account, we're about 80% invested. Now last week we took some profits. We're back down to about 70%, or maybe a little bit lower than that, invested. So we'll probably buy some things. We get a little bit of volatility in front of the earnings reports coming out in July. And then what we want to think about is August and September. As we approach those really tough seasonal months, we want to take some profits. As the stocks move up during those earnings reports, we want to pull down our exposure. We want to get prepared for maybe a 5 or 10% sort of decline in those tough months of August and September. So if you have any questions, ping us anytime. If you're an investment advisor or individual investor, we're happy to help with your portfolios. That's what we do. We manage money for investment advisors and individuals. So ping us, give us a call. Happy to set up a call to discuss what we do. If you have any questions, again, ping us anytime. Come to my website, Patrick Adams CFA, and sign up for a hard copy of Market in a Minute. We'll send that to you every week. Take care.